Okay, so let's talk about why the the way that you have this setup happening on QQQ right now is so important. All right, number one, you're approaching the negative 80% mark, right? Now, I'm actually going to pull up AI and I'm going to have it help me break this down for you guys and not, not help me break it down, but more so as we've been doing in the most recent sessions, um, fact check this with you guys here, right? So, okay. So here's the reality. Here's the reality, right? So the negative 80% is actually a sign of weakness if you're closing below that point. Right? It's actually a sign of weakness if you're closing below that point. So if the market bounces from this negative 80%, that shows that, essentially buyers are stepping in and protecting the market from those levels, and keeping us held up, right? And from a fundamental perspective, as we talked about, this supports that thesis that there are some undervaluations going on for some of the larger names, and we may be at that selling climax at the moment, right, and not really know it. Right now, when you're hitting this negative 80% mark, right, it means something in terms of the Williams percent R. So here's what I'm going to do, right? We're gonna punch this in AI. What does the negative 20% and negative 80% on the Williams percent R represent? And what are all of the angles to look at them from an analysis? All right. So pretty much, let's see if they bring up what I brought up, right? Basically, I want to see if they bring up what I just brought up, right? And then if we can get a little more clarity from that. By the way, I fed Gemini some more samples of my writing, and my way of teaching this morning. So let's see if the voice fits, right. Let's see if it's talking a little different this morning. So it says the Williams percent R is a momentum indicator that measures overbought and oversold levels, right? Functioning similar to a stochastic oscillator, but on an inverted scale of 0 to negative 100. The values of negative 20 and negative 80 serve as the primary thresholds for extremes in price action relative to a specific look back period, usually 14 days. The full representation. In a standard 14 period calculation, the indicator compares the current closing price to the highest high and the lowest low of the last 14 bars. So negative 20 is overbought. This represents the upper bound. When the oscillator rises above negative 20, the current price is trading within the top 20% of its recent high-low range. This suggests the bulls have pushed the price near the ceiling of its recent history, right? The negative 80% oversold. This represents the lower bound. When the oscillator falls below negative 80, the current price is trading within the bottom 20% of its recent range. This suggests that bears have pushed price near the floor of its recent history. Now, analysis angles, 4 perspectives. Let's see if they bring up the one that I talked about. That's what I'm trying to see. I'm trying to see if they bring up what I just said. As far as like if you hit that negative and then you bounce from there, right? What that suggests, right? That's what I'm looking for. So 4 perspectives. So to perform professional analysis, you must look at these levels through different lenses rather than treating them as simple buy or sell signals. Okay? The momentum exhaustion angle. The most basic view is looking for reversals, right? If the percent R hits negative 20 and then crosses back below it, this is the one we're talking about right now. So that's the first one they go with, right? So if it crosses, or if it hits negative 20 and then crosses back below it, momentum may be fading, suggesting a potential short or exit of a long position. Conversely, dipping below negative 80 and crossing back above suggests the selling pressure is exhausted. So that's, who knew they were going to start with exactly what I was saying, right? There they go, right there. They're saying exactly what I was just talking about. So right now you have this negative 80% retracement right here, right? So if we start to bounce from here, this is going to really help make the case for a bullish reversal. Okay. Now, I'm not going to read the rest of this here because let's read all of it. Let's read all of it. It ain't that much. All right. Number two, the trend confirmation. In a strong trend, the percent R can stay embedded in overbought and or oversold territory. This is actually one of my favorite ones as well. I talk to you guys about this one all the time, right? In a bullish trend, if the trend stays above negative 20 and rarely touches negative 80, the trend is exceptionally strong. In a bearish trend, if the price hugs the negative 80 line and fails to reach the negative 20 on rallies, the downtrend momentum is dominant. And we talked about this a lot recently. So you can see our negative 20% here is 589.76. Okay? So we've been talking about this for quite some time, as long as we stay above this level. I've been saying that for you guys, as long as we stay above this level, right? When we start to fall below this level, that's when you got some things to think about. Now, I'm tracking the 14-week high from the 52-week low. So now you guys can understand why I've been saying that this entire time, because that's your sign of strength. That's why it says strong right here. Negative 20%, strong. All right? Negative 80% is weak. So if I get trapped below negative 80, we're in an extremely weak trend. If I get stuck above negative 20, we're in a strong trend. And I just saw we bumped up to 594 just now. I don't know if that's what's actually going on the chart because obviously Google Finance has delays. But I'm just saying though, let's keep going. All right, scrolling on up. The failure swing angle, another one of my favorites. Okay. All right, the failure swing. So this looks at the strength of a move by observing if the indicator fails to reach the opposite extreme, right? So, for example, if the percent R rallies from negative 80 but fails to reach negative 20 before turning back down, it's a sign of significant internal weakness, right? If the percent R drops from negative 20 but fails to reach negative 80 before running back up, right, it suggests buyers are stepping in early, showing structural strength. All right. Another one of my favorites there. All right. So now you guys can see why. Now you guys see why I use those so much. Right? Isn't it a beautiful thing when you? Because if you can understand it, right? And Anisha talks about this all the time, right? If you can understand it, right? That's when you're getting. That's when you're getting somewhere with what with what you have as a tool. Right. And we talked about this weekend actually in my in my weekend classes that I host. I talked about it this weekend, you know, where I played for them an audio of a guy pretty much making all the false claims in the world that you can't do things like this. Right? But it's very clear that you can. Right? It's very clear that you can. right, when it's all said and done. Now, the divergence angle, while less common than with the RSI, you can look for discrepancies between the percent R if the price makes a new swing high, but the Williams percent R makes a lower peak. Right? It suggests the buyer is not as the buying power is not as robust as the price suggests, hinting at a distribution phase. Now, I'll be honest with you, I don't like this one. I like to stick with the RSI. I have it right here, and you can see what are we getting? Bullish divergence. We're gonna get to this part in a second. All this over here, we're gonna come back over to that because this is the whole other ball game right now. We're gonna talk about that. Practical application. Right? It is important to remember that overbought does not mean sell immediately, and oversold does not mean buy immediately. In a parabolic move, an asset can remain overbought for weeks, right? Yada, 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 blah, blah, blah. All right. So let's talk about this over here. Let me move this out the way and let me blow this up. So now that you guys get a hint of why I was bringing up that negative 79%, now we can talk a little more in depth and get an understanding here. All right. So here's what's happening. All right. You're hitting that point that we're talking about and you're bouncing. All right. You're bouncing off of the lows. This is also happening as you are hitting the 2 standard deviation band. This is also happening as you approach the 3 standard deviation band. This is also happening as you have a bullish divergence. Okay, so these are 3 elements that already suggest that there's a high probability of a move back to the upside. So what I like to see is when we hit this negative 80% mark, we get these other signals, right, giving us a setup at the same time, right? Get these other things giving us a setup at the same time. Now, let's keep going. Let's keep going here. The other thing here that I want to discuss is that we can also talk about the environment that we're in.
So, a quick question, Duran.
Yes, ma'am.
Was you supposed to be saying negative 20 or negative 80?
Negative 20. Oh, I'm sorry. Okay. I'm sorry. Negative 80. I said negative 80, right?
Negative 80 is at 449 on the.
No. Down here. Look down here. See where we're mousing?
No, it's running slow. So.
Okay. So
you're looking at what are you looking at?
The retracement. Right. The retracement negative. Right. Okay. So that's why I'm saying negative 80.
68%. Okay. Got it.
So basically, what I'm saying, right, is so we hit negative 80 and we're bouncing. Which is what we just talked about, right? If you hit negative 80 and then you bounce from there, that's a positive sign for a potential reversal, right? So now watch this, Anisha. So we talked about the setup, right? But there's other parts to this setup that deals with the environment that we're in. For example, a low ADX and a flat 20, right? You have your low ADX and you have a flat 20. Good morning, Shay. Good morning, Brooklyn. Good morning, AA. Good morning, Stephen. Good morning, NS. Good morning, guys. Good morning. Good morning. Good morning.
Morning.
So you have a flat 20 MA, which already suggests. So let me explain to you why a flat 20 MA suggests limited downside. Matter of fact, I should have left that thing open, right? But we'll leave it at that. But why does a flat 20 MA suggest limited downside? A flat 20 MA suggests limited downside because it itself already suggests that you're in a sideways market. It in itself already suggests you're in a trendless market. Okay? Then you have a low ADX. And your ADX, when this number is below 20, by the way, Anisha, I'm using a 14-day ADX now. So if you would be so kind, let us know where your ADX is. I think we should be within 2 points of each other. Let's take a quick glance. We should be within 2 points of each other. Take a quick
I'm
look.
at 1804.
Look at that.
Good job.
Ooh wee. Oh my goodness. So I made it. So I made the RSI on point. I got the ADX as accurate as I can get it. So what I learned about why our ADX is off from yours, Anisha, here's what I learned. I learned that essentially the ADX itself looks at an infinite amount of time behind it. So the more time it looks at behind it, the more accurate it be, or the more not accurate. The more time it has behind it, it changes the actual numbers. So the only way for us to have the exact same number is for us to have the exact same amount of time behind us. Meaning, how many bars back does your ADX actually have at its disposal? We don't know, right? So, but I was able to look back an entire year. And I can look back beyond that as well, but I'm going to hold off on that, right? I was able to look back an entire year, which brought the ADX more in line with what we were seeing, right? So anyways, so a low ADX, an ADX below 20 also signals a market that's trendless and going nowhere, right? So I want y'all to think about what we're discussing here. Just think about what I'm saying to you, right? According to the world outside of the equity channel, according to the world outside of this room right now, the market is plummeting. It's going right. It's going down. It's going down hard. But what does the data suggest? The data suggests if the market's going to fall hard, it needs to fall really hard. Y'all with me on that? That's what the data suggests. I'm gonna say it again. The data suggests that the market's going to fall hard. It's got to fall really hard, right? So we needed to be down like 5% this morning to really have that be sticking, right? Because this down 1.1% at the open. I would say I wasn't buying it, but then that would be the opposite of what we actually would have done, right? We actually would buy it, but we're not buying their shakeout, right? It's just not happening. So this is where the market finds liquidity and then starts to make look at it. Let me pause for a second, right? And so for those that are going to end up watching this on YouTube later, and if you're watching this on YouTube right now, you're witnessing live and in your face, right? That what we talk about actually works. It's the real deal. You see it right here, right? This is why when I talk to you guys and I just do that little heat check and I ask you, you scared? That's me just highlighting that. What do you have to be afraid of? You have all the tools. You got all the tools, right? Do what you got to do. Handle your business, right? Do not let this market pull your mind away from statistical probability. And I get it. Even though you may not have that fear within you, that doesn't mean that scary things aren't happening out in the world, right? So those two things aren't exclusive to each other, right? So yes, you can be confident and lack that fear trait, and not let the market rattle you, right? But at the same time, sure, there could be scary things happening in the world. So what I mean when I say that, let me break that down, right? Is that we can always be wrong, right? But it still doesn't require fear in your response, right? It still doesn't require fear in your way of taking action, right? We still do everything. We still do everything according to, right? Within accordance to our system, period. Nothing changes that, right? I told you guys if the VIX went up, I'm buying the VIX. What did I do? What did I do? Exactly what I told you I would do, right? How often do I tell you I'm going to do something and I don't do it? That's because it's always a plan, right? What did I tell the gentleman earlier about us? We're educated and prepared. And that's all that matters. All right. So I'm gonna break this down one more time so that way we understand what we have in front of us and why this market is likely bouncing from here. It's not all technical factors. We're looking at the technical factors relative to what we already knew. From a fundamental perspective, we already knew the tech sector was the most valuable sector at this moment. When we talk about value, we're not talking about price. We're talking about the price we're actually paying for the growth and for the value that we see within these companies. Right? That's what we're talking about. Okay? So we already knew fundamentally that there was some strength underlying the market. Now we look at the technicals, and what do we see? We see that the market approached the negative 80% retracement between the highest swing high and the lowest swing low over these periods. Right? We see that the market at the same time is in a low volatility market with a flat trend, which means that there's a high probability that it hits boundaries that it's not likely to go beyond at this moment in time. And well, then that gets supported by a bullish divergence right here, right? And it gets supported by us hitting, right, 3 standard deviations to the downside. Okay? And for those that aren't familiar with deviations, this is known as normal distribution. There's a 99.9% chance that all of your price action is going to happen within this 3 standard deviation range. So you're hitting a statistical anomaly when you go beyond this point. And that's why I said if the market was going to fall today, it needed to fall hard. All right? So I'll go ahead and end this video here, and we will talk more about this in the future.